Hello, testing 1 2 3. Can you guys hear me? Let me know, guys. Let me know in the chat, guys, if you guys can hear me loud and clear. We good to go? All right, sounds good. All right, just give it a couple minutes. Get people settled in. Make sure everyone's logged in. There's no echo or any weird stuff going on. We had some issues last time, so I just want to make sure that everything's clean, good to go. Just woke up, so apologize if I have some case of the morning hoarse voice here. Just got up literally 45 minutes ago. So, but I got my water here. Should be good to go. All right. So thanks a lot to all you guys that giving up your Sunday here to hang out here at MadazMoney. Really great to see all you guys out here ready to learn. This webinar is going to be a really good one. As I explained earlier in chat, this is going to be the third webinar in a 3-part series. It's highly recommended, but not required that you watch the first and second webinar. The first webinar was about opening setups. The second webinar was about the setups after the open, and this webinar is going to be talking about the afternoon setups. Of course, there's no lull setups because that's obviously trader nap time. So don't want to encourage people to trade during chop and low volume lull. So I decided to skip over that. That's usually a time where I'm not even trading anyways. But the afternoon setups, we're going to talk about this one. There's lots of shenanigans, all that stuff, and I want to make sure that everyone's on the same page, and that way we all avoid getting trapped. I mean, we saw some nasty stuff 2 weeks ago, and I just want to make sure everyone stays safe and understands fully what goes on in the afternoons. So let's go ahead and dive right to it. All right, so afternoon setups, typically 2 p.m. to the close. Not necessarily like that. That's why I have the tilde there. But basically, general rule of thumb, it's about 2 p.m. to the close, the last 2 hours essentially. But sometimes, it could start a little bit earlier, 1 o'clock Eastern time, an hour earlier. It more or less depends on the setup. It's not so much an exact time, but generally speaking, it's the last 2 hours, sometimes the last 3 hours. Now, during this time, like I said, there's typically lower quality setups. It's due to the fact that there's lower volume, there's tighter range, and as a result of that, we got to be really, really disciplined in waiting for the best possible setups, the best risk reward. You don't want to, chase stuff. You don't want to get chopped up, throw away your profits from the morning, and it's going to get really, really frustrating, and you might fall into that revenge mindset. And things just spiral out of control because you're going to start forcing trades in a lower edge environment. So you don't want to do that. Excuse me. So what do you need to do up to this point? You got to analyze what the stock has done. What does the chart look like? Is the stock bullish? Is the stock bearish? You got to identify all the supports and resistances. Where's the line in the sand? I know this is a question that's been asked a lot lately. Where is the line in the sand? We got to identify and figure out how far it is next to the nearest support level. Is it close to pre-market highs? Is it the same as pre-market highs? Is there a huge air pocket? We're going to talk about air pockets. Air pockets are a very big deal when it comes to line in the sand. Identifying high and low percentage setup. So we're going to talk about edge here, okay? You want to wait for a clean breakout or a breakdown. Again, you don't want to chase. You don't want to get faked out. You don't want to get slammed back down if you're chasing the long. You don't want to slam the support and then get wicked back on the short and then you get squeezed from hell. So we're here to talk about all the possible scenarios on when we can actually get in and not, reasonably expect to not get screwed. Watch for air pockets, like I was talking about. You want to look for air pockets. When you're looking at line in the sand. If the pre-market highs is well below the line in the sand, that's what we call an air pocket. So, how do you manage that situation? Avoid all 50-50 situations. Prevent getting chopped up and eventually getting caught in shenanigans. Look, you got to make sure that you have a clear, obvious move for us to jump into. Again, wait for a clean breakout or a breakdown. Everything else is essentially 50-50 chop. You know, market makers are just there to just take your money. I hate to say this, but they're out there to get you. That's their job. That's the reality of it. So we got to make sure that we're not putting ourselves in a position where it's essentially, hey, just take my money. Here's a blank check. Just take my money. You don't want to do that, okay? So we're going to talk about a lot of these scenarios where you want to protect yourself. You want to avoid over trading. You want to avoid forcing trades, and you want to make sure that the setup comes to you, and you're not trying to make something happen that's not really there. Okay, and the last part, we're going to look at volume. Of course, volume again gets really low, but usually on these breakouts and breakdowns, the volume typically returns. Why? Because there's panic. People start to come back, and they start getting freaked out because their stops are getting triggered, and that's usually something that triggers volume to return. So that's what we want to look for. That helps us determine whether or not this is a high conviction move, and whether or not this is going to be a legit clean move, and the volume will help us determine that. So let's talk about all the scenarios, okay? Again, we're going to go back to relating it to pre-market highs. So this goes back to webinars 1 and 2. Pre-market highs is something that we use here at MadazMoney to determine whether a stock is bullish or bearish. So over pre-market highs is typically bullish. So in this case, we're looking at a stock that goes bullish, consolidates for a little bit, and stays bullish. This is also known as the all-day runner. And we're going to talk about some examples in the coming slides. It's going to be pretty obvious. You guys know what an all-day runner looks like. But we're going to talk about it anyways, and how we manage this the situation, and how do we optimize and not get stuck in some less favorable situations. Over pre-market highs, bullish consolidation then turns bearish. This is also known as when the all-day runner basically looks like an all-day runner and it fails. And we've seen a lot of examples of this. A stock that kind of rips in the morning, goes sideways for a couple hours, and then it cracks a line in the sand, and then it just dumps, right? This is what we also know as the bid slamming Bobby or short bear. Loves to trade this setup as well. This is where we see the line in the sand form, and there's a couple fake outs to the high at day, and then it just cracks line in the sand late in the afternoon. We've seen this several times, so we're going to talk about that as well. Below pre-market highs, this is probably the easier setup when the stock is bearish and it stays bearish, right? So stock kind of fakes out pre-market highs. It just goes in a permanent downtrend, and it's basically a short on pops all the way down. It's also known as the all-day fader. Probably one of the more simple, easier setups to trade. The other setup is below pre-market highs. It's bullish, but it turns bearish. Bearish, but it turns bullish. So this is a very rare example. This is a very difficult read. This is the one where they really trap a lot of people. And this is when the all-day fader goes wrong. And I'm specifically in this particular case, since we're talking about afternoon setups, I'm going to talk about this particular scenario only when it occurs in the afternoon, not in the morning. We've seen it happen in the morning where a stock looks like a short below pre-market highs, and it kind of comes back around 10 o'clock, 11 o'clock. But this particular case, we're only going to talk about in the afternoon, in the late parts of the day. So this is when it's really dangerous, because it's collected shorts for like several hours, and it's looked like an all-day fade, and all of a sudden out of left field it just comes back from the dead in like the last 1 or 2 hours. So this is very deadly for some people that kind of just look like they're they're in the clear. They've been swinging the short the whole entire day. They put up like a stop order or something like that, head to the office for a meeting or head to lunch or something like that, and they come back, they realize what the hell just happened, right? So we're going to talk about that as well. Very, very rare, but very deadly setup if you're caught on the wrong side. The last scenario, this is not part of the first 4 scenarios. This is kind of like a side scenario. Obviously, this is going to be the afternoon PR chat pump scanner play. So I know I have 4 scenarios up there. This is technically the fifth scenario, but this is a setup that I'm going to talk about that I usually avoid. Not really a big fan of it, but we're just going to talk about it just in case some of you guys want to learn about how it works. But this is when there's a stock that pops up on scanners due to a news or PR pump or maybe a chat chase or something like that. So we're going to talk about that as well. So what do we need to look for with respect to these scenarios? So we need to look for, again, line in the sand, identify it. Proximity to pre-market highs. Is it the same as the pre-market highs? Does it coincide with it? Is it well above it? If it's well above it, you got to look at the air pocket. How big is the air pocket? And we're going to talk about why that matters. The duration of the consolidation. Okay, so the consolidation take place for 30 minutes, an hour, 2 hours. You know, in the case of LJPC the other day, that thing was like sideways for the whole entire day, for like 5 hours. You know, what does that mean? Who is more trapped as a result of the consolidation? Is it more longs or shorts? So sometimes there's a gray area here. It's a lot more difficult to figure out who is more trapped. There are clues to identify who's getting trapped. And, you know, we can use that to our advantage to determine which side of the trade is the more likely trade that will give us the higher edge. Again, volume. Drop-off is expected. It's the afternoon. We're not going to have higher volume in the morning most of the time in the afternoon compared to the morning. But, like I said, in some instances where there's some sort of major event, such as a critical line in the sand crack or a high of day break where a bunch of people get stopped out, you can expect volume to increase, and that can increase the conviction of that side of the trade. So we want to look for clues with respect to volume. Want to look for clues with respect to who's getting trapped, longs or shorts, and we want to identify that line of sand, and you want to make sure how big is that air pockets, because that's going to come into play later on. So any questions regarding the general idea of what we're going to talk about today before I move on to the next slide, which is going to be talking about the first scenario? Awesome, guys. So the first example, over pre-market highs, consolidation, bullish, stays bullish. Again, this is also known as the all-day runner. So we're going to draw, I'm going to grab my little pen here. Hopefully you guys can see this. Yeah, hopefully you guys can see that. I'm not sure if that's dark enough. Let me see if I can pick a darker color. Let's go with black. Let's see this one. Okay, let me see if you guys can see this. Maybe make it a bit bigger. There we go. So you guys should probably be able to see that. Okay, so this is a kind of chart that kind of looks like this. Morning, you know, you got your pullback. This is your let's just say this is your pre-market highs. Breaks pre-market highs, right? And then you got this like sideways for a while. Right? Now this is your high of day. This is your line of sand. This is your air pocket right here. Okay, so what can happen in this scenario? The stock can either go down, right? It can go this way and just crack. But in this particular scenario, we're going to talk about stocks that break out. Okay? So this is where the stock breaks pre-market highs in the morning, kind of consolidates, line in the sand, breaks out. Okay? So this is a very powerful long setup. When you have a line in the sand support hold, obviously you need the line in the sand to kind of hold. Multiple line of sand or higher support defends. So sometimes the stock makes higher highs. There's going to be a support hold above line of sand in some cases, but you want that line of sand to hold. Long period of consolidation. You have the long period of consolidation right here, above the line of the sand. Clean breakout over high of day, usually a massive volume. This is the breakout right here. Now, what you want to avoid is you want to avoid a fake out. Okay, so some of these moves right here, it's very tempting to think that, okay, I can anticipate that high of day breakout. It might break out right here, you know, it might break out right here or here. But a lot of times it will break out by like, you know, 10 cents and it'll slam back down, right? We've seen that so many times before, and you want to avoid that because you want to avoid getting chopped up in this mess and then eventually missing out on the real move. Okay, so you want to avoid getting faked out by these fake high of day moves. So sometimes, again, it will tease you by breaking out over high of day by like 10 cents, sometimes even more than that, 20 cents, whatever, and then it will stall out and then it'll slam back down. You want to avoid that. Really, really critical. We're going to talk about some examples later on when that doesn't really work. So you want to wait for a big move. Usually I want to see the stock like break out, 10%. So maybe like on like a $5 stock, I wanted to move 50 cents or so. On a $10 stock, I wanted to move like $1. So that way, if it goes over that much, all the shorts are in trouble. All the shorts are going to be panicking when they see that the stock is well beyond their stop and it's not coming back down. So understanding that, that's how you had to determine, that's where the legit breakout is compared to the less legit, okay? I kind of realized I just had my mic on mute, so I guess you guys didn't hear any of that, right? Okay. Okay, good. That was kind of weird. I had my mic on mute, and for some reason it heard you guys were able to hear that. Okay, so continuing on what I was saying, wait for the confirmation, guys. Wait for the legit breakout. Don't get faked out by the the weak 10, 20 cent move and then getting slammed back down. So that's the whole point. Again, the stock will remain choppy as long as it's range bound. Okay, so this is usually during that that low hour, 11 o'clock, 12 o'clock, lunch hour, around that time. That's when the stock's really low volume. It's going to be range bound. It's going to be choppy. It's going to be a lot of fake outs, a lot of fake breakouts, fake breakdowns. You want to avoid that. Okay, and this is why I trader nap. I trader nap because I don't want to put myself in a situation where I might get tempted and chasing something stupid and just giving back my morning gains. So just be careful with that, guys. Understand that it's expected to be choppy. The volume will tell you that. The range bound action will tell you that. You want to wait for the clean move, and then that's where the real money is made. Okay? So the larger the air pocket between line in the sand and next support level, the poorer the risk reward for a long against line in the sand support. So a lot of you guys that like to buy the support right here, for a long, like, okay, this stock's in a range, it's in an obvious range. Why don't I just keep longing this, right? It's easy money, right? Long here, sell here, long here, sell here, long here, sell here, right? Why not just do that? Well, in some cases, the line of sand is so far above the pre-market highs, which is sometimes the next support level down, that if you buy here and then you get dumped, you're gonna lose a lot of money. Okay, so that's what I really want to put across as a key point here, a key idea that you guys need to understand is that if the line in the sand is well above that pre-market highs and you decide to buy the support level, you're going to risk getting dumped all the way down to here. Again, it's all about risk reward, right? So sometimes the line in the sand and the pre-market highs are not too far off, or maybe they coincide. In that particular case, then you can probably get away with it. You can get away with longing right here if the pre-market highs also just happens to coincide with it. So, let's just say it looks like this, right? This is the pre-market highs and it coincides with the line in the sand. Then maybe you can buy here and try to sell here. That's a little bit more less risky. That's less risky. But if the pre-market highs is well below that line of sand, you're risking, potentially getting that death drop dump. So you have something to consider. Again, that's why I don't bother with this stuff. It's just too risky. You can easily lose. Depending on how big that air pocket is, it could be like 50 cents, $1, or whatever. So it's just not worth it for me. All right, so let's go ahead and jump into some examples. Any questions so far, guys? Hopefully these visuals help you guys see this a little bit better. Let me know if there's any confusion. We're going to look at some examples here, some actual examples. So how do you avoid, Phaser asking, how do you avoid a fake breakout? A fake breakout needs to be like a big move. It needs to move, I would say, like 10%. Again, a $5 stock, it needs to break out by like 50 cents, 60 cents, whatever. A $10 stock, it needs to break out by $1. You want to avoid like going after a breakout of like 10 cents, 20 cents, whatever. Those are really weak. And you want to see that it breaks out on massive volume, not just by a couple, a couple volume, like a little bit of volume, like higher than like the highest volume so far during the day. You want to have it like break out on the highest volume of the day, ideally. Sometimes it won't do that, but you need to have a lot of volume in a big move. Shakamia asking, can a stock have more than one line in the sand? It's possible, but usually there's one critical one where everyone puts their stops at. So sometimes maybe a stock might look, I'll draw it out here for you guys. Maybe a stock, sometimes, let me see, hold on. So maybe sometimes a stock might do this, right? So this is still the line in the sand, but this is just like the next support level below. So this is a pre-market highs. So this is an air pocket in itself, and this is another air pocket. So you got to obey that as well. But this is going to be the line in the sand. The line in the sand is where the level is, the stock has been tested the most. So this is where like the support has been tested like multiple times. So this is technically the line in the sand. Line in the sand can be determined at any time. Okay, line in the sand has nothing to do with time. Line in the sand has to do with how many times the stock has tested that same level. So if a stock has like gone sideways for a while, it doesn't matter what time in the day it is, as long as it looks like this, that's line in the sand. And we're gonna look at some live examples, so you guys can see exactly what I mean. Okay. Sorry about that. This morning voice is really killing me. Alright. So let's look at the first example. LJPC on 6-9. Let's talk about it. So this is 6-6. Sorry, 6-6. Sorry, June 6th. So let's go ahead and zoom in here. There we go. So there we go. We have our pre-market highs, right? We got the breakout, right? This is our air pocket. And then you got this consolidation. And then this little breakout end of day. I mean, it happened kind of late, but this is a recent example, so I just want to give a recent example so you guys see what I'm talking about. So this is basically your line in the sand right here. This is your pre-market highs, intermediate support, air pocket, consolidation, and then the breakout, right? And notice the low volume. You see the diminishing volume here. Highest volume in the morning, not surprised. Low volume during consolidation. And then slightly increasing volume at the end. This is probably when shorts start giving up. Had this breakout occurred slightly earlier during the day, it probably would have been on higher volume. But you guys get the idea, right? Pre-market highs, stock breaks out. It's bullish. It consolidates. It stays bullish. It doesn't break down. So this is LJPC. Line in the sand right there. Pre-market highs, consolidation, and the breakout. So any confusion on this particular example? This is a pretty straightforward example, LJPC. So pretty clear, right? So this is the kind of setup that you want to identify, right? You want to identify what's going on. You know the stock is bullish. It needs to give us a reason for it to turn bearish, and there's no reason for it to be bearish here. It's still bullish. It's still consolidating. You don't want to chase, because I think what a lot of people would do is they see this crack right here, right? Oh, it's going loud. It's going down, right? It's gonna tank, right? No, you know, like you gotta wait for a clean move. You can't chase this stuff. Look at the volume it did it on. It's such low volume here. People gotta understand there's a volume component to it. You gotta wait for a clean breakdown, and there is no such thing. I'm sure some people probably chase this red candle and got chopped up here. So be careful with that, guys. Just want to make that clear. We want volume. We want a clean move. We don't want to get stuck in the chop. And you know, go take your trader nap if you have to. All right, let's talk about the next example, which is going to be SOLY. On May the 28th, this is a pretty familiar one. Okay, so there we go. This one did not have a pre-market high, so we're going to use this resistance level as an example for the air pocket, because this goes kind of like a scanner play. But you can see this resistance right here. It broke out. You have your consolidation. Line in the sand is right here. Intermediate support level. High volume in the morning. Slightly diminishing volume here. Really low volume here. And guess what? Breakout right here. Higher volume picks up. Here's the breakout. Breakout. A little bit of flag, and then the breakout after hours. So you guys see the pattern, right? It's the same thing over and over again. Right after the breakout of the morning resistance or pre-market highs or whatever, in this particular case it's just the morning resistance because this is a scanner play. It breaks out, consolidates for a little bit. Some people probably chased the slam candle, got chopped up, trapped some more shorts, fueled this move. Volume picks up, short stop out, and then the stock breaks out. Cadrius Blint asking, is there a specific number of times the line needs to be tested to be the line in the sand? No. It's just more powerful if it's tested more times, or it becomes more relevant. Because the more time it gets tested, that's the more potential shorts that can get trapped. Saying, would you play the long at the line in the sand support? No, I wouldn't do that unless it coincides with the pre-market highs or there's like a nice little quick scalp play in it. I would do small size maybe, but if there's a large air pocket, I wouldn't recommend it for the reasons I explained earlier. It's just not worth it. All right, let me see. Yeah, I don't know what's the deal with the resolution. I don't know how. Let me see. There we go. Changed it back to HD. Let me know if that works, guys. Still fuzzy? We good? I changed it to, yeah, change it to 1080p, guys. All right, so would I long the stock? Jonathan W asking, would I have long the stock in the morning breakout? If so, where? I would probably it would probably be just like a typical buy on dips kind of play. You know, if I can tape read this long against pre-market highs or whatever the morning resistance is. So stock breaks out of the morning resistance, where you look for a long against the dip against that morning resistance or pre-market highs or whatever it may be. The dip ended up being right here, so might have been able to tape read this. I'm not 100% sure, but overall, I would still scalp these moves. But once it starts going sideways, that's when I start to call it a morning. You guys probably noticed that every single day. You know, I tend to walk away around this time, 11 o'clock. That's because that's usually when this happens, and I just don't want to get chopped up. Stalker 8, do you think that big red candle during my trader nap was just a fake out to take out the week and go back up? Yeah, I mean, during that time, that's when all the traps happen. So, you know, a lot of the games happen during this time. I just want to avoid this stuff. Big red candle could be a trap. You know, sometimes you never know. You never know until you see the end result, right? This is like a hindsight is 20/20 kind of thing. You never know what the end result is until it happens. So, for the most part, I just would just avoid this. You can see this big red candle didn't even result in a nice bounce either. So, you know, this thing dumped from the looks like $1 and it barely bounced like 20 cents or something. So that's, you can kind of tell that even the bounces on the long side were sketchy. And then it just chopped around here, and then it rips. So this is not a favorable time to trade. Look how low the volume is too. So, you know, for the most part, it's just not worth it for me to get involved in any headaches during this time. It's just not worth it. Okay, so any final questions on this SLLY before we jump on to the next example? Alright, looks like we're good here. So the last example, ABIO on May the 1st. I remember this one. This is a really good example. This is when the shenanigans pretty much started. The May shenanigans. So again, yeah, this is another scanner play kind of example. So we don't have pre-market high, so we're gonna use this. This one, you know, rips, teases the breakdown. I'm pretty sure a lot of shorts thought it was done. Started grinding back, and then there you go. Break out of this level, right? And then it chops around. Yeah, your line in the sand right here. We'd have to zoom out. This has to be a multi-day kind of thing because it didn't break out in a day, but you can see what happened the next day. I'm going to erase this now. Line in the sand, chopped around, and then next day it takes off, right? It was hard to find some examples where it was perfect, so bear with me here. I kind of have to stretch it, but there are a lot of examples where this actually happens. We haven't had many clean long setups lately, unfortunately, so I couldn't really find any good examples, but you can kind of see a similar setup right here. Right there, line in the sands right here. More or less now coinciding with the pre-market high, so this is a good example of that. You got the consolidation, extended consolidation, and the next day, and then it just takes off. So this is another good example of that. High volume as well, low volume during the grind back. Volume picks up during the breakout. During the chop, volume decreases again. And obviously the next day the volume takes off as all the shorts start freaking out right here. So again, guys, the key here is to trade the stock when it's making the big move on the high volume. You want to avoid the low volume chop consolidation because that's where you can get faked out. That's where you can get trapped. That's where you might get tempted into, you know, playing guessing games and thinking you can anticipate the move. I mean, a lot of people talk about anticipation and all that, but it's just very difficult, especially if you're a new trader, to really know when it's the right time to anticipate the move and when it's not. There's just too many variables you got to consider, and it's just something that you should probably just wait until you're a little bit more experienced, and then you can kind of get a more intuitive, you know, sixth sense kind of thing, where you can just know, okay, this is probably the breakout or the breakdown. But while you're still learning, it's very easy to get faked out. And then on top of that, the lessons that you're going to learn from this, I mean, they're good lessons, but they're going to be very painful ones, because we can see what happens when a stock, you know, fake breakouts, right? It slams back down. You're going to lose a lot, man. If you slam the shorts on the lows, you know, you see this wick back right here. It spikes right back up. It's really, really nasty, man. If you're trying to put yourself in harm's way in this kind of scenario, the damage could potentially be pretty bad. You know, on top of just your account taking a hit, your mindset's going to take a hit too, because the losses are going to be brutal. So, you know, when you see this consolidation on low volume, it's my recommendation that you should probably avoid it. It's just too much trouble. Too many things can happen. So just be careful with that, guys. So this is it for the bullish consolidation stays bullish. Any other questions before we move on to the next scenario? And again, I want to make a point that a lot of people can't tell that this is going to be a bullish stays bullish scenario until it actually occurs. You know, a lot of times you see the same exact setup as we're going to talk about in the next slide, where it just turns bearish and it dumps. So you never know. That's why it's in your best interest to wait for confirmation and not try to assume, okay, this is going to be the runner or this is going to be the dumper. It just doesn't work like that. So just wait for confirmation, guys. Spare yourself some migraines. So let's go ahead and jump to the next example, next scenario. This is the over pre-market highs, bullish consolidation turns bearish. This is a favorite of, you know, Bobby's and Short Bear. This is where you have a chart. You know, it kind of looks, it's same setup in the morning. Breakout of pre-market highs or morning resistance. Consolidates. Right? But this time, instead of breaking out, right, instead of going up this way, it dumps, right? So again, when you're trying to play guessing games in this consolidation, you don't know what the stock's going to do. You don't know the stock's going to go up or it's going to go down. Okay, guys? There's going to be clues like we're going to talk about, but you don't know for sure. So I want to add on to the bullish side of things. It helps the bull side if it's trapping shorts, okay? A lot of fake breakdowns will trap shorts, and that will fuel a move higher. A lot of fake breakouts trapping longs will help fuel a move lower. Now, is that always going to be the case? No, not necessarily. The manipulators, if they have a death grip on the stock, they can do whatever they want with it. But those are clues that you can use to help you determine what the stock potentially might do later on. But still, I don't recommend you guys doing any guesswork here. It's just too risky, and you're putting yourself at risk of a big loss potentially. But there are some clues. Again, fake breakdowns, good for longs later on. Fake breakouts, good for shorts eventually, if that's the case. Now, this is basically a failed all-day runner, the stock that looks like an all-day runner but ends up giving up at the end of the day. We've seen that many times. It's a very powerful short setup. If there's a lot of multiple high-day resistance rejects, again, a lot of fake breakouts. Long period of consolidation, again, that seems to be the theme, right? A lot of consolidation means a lot of people can potentially be trapped. Clean breakdown below, line in the sand on massive volume. Again, kind of like the bullish scenario, but this time on the downside with line in the sand being the level you want to watch. The larger the air pocket between the line in the sand and the next support level, the better the risk reward. Why? Because you have a lot of meat on the bone. If there's a lot of support levels that are really close to the line in the sand, I'd be less inclined to short it because the stock might just find a bottom closer to the line in the sand crack, and it might not be worth it from a risk reward standpoint. If that resistance is well below it, obviously you have a lot of potential meat, a lot of gain there to be had. So, you know, if I see a chart with a line in the sand really far from that next support level down, I might be more inclined to go for that short play. You know, there's just a lot more meat there. What you need to look for: a weak fake breakdown below line of sand. This is basically a fake breakdown, the wick back kind of move. If you try to slam this here, or here, you might get the wick back. You might get squeezed back up, and you get chopped up. Okay, sometimes it might result in the squeeze from hell's risk, and we're going to talk about that later on with an example. Will remain choppy in the range-bound consolidation. So similarly to the bullish scenario, if you try to trade this action, you're going to get chopped up, most likely. Low volume as well during the consolidation. So again, it's very, very similar to what we just talked about with the bullish scenario. The only difference being that it ends up cracking line of sand late in the day. Now, I want to also add on to the point that in the morning, who's trapped, right? The shorts are trapped in the morning. In the afternoon, or during lull in the afternoon, who's trapped? It's hard to tell, right? Because in the morning you have the shorts trapped here, but here, who's trapped here? So how do you know that there's going to be enough longs trapped to overcome, to offset the shorts trapped in the morning? This is why a long period of consolidation is important. A long period in consolidation collects longs on these fake high of day moves. Right? And if enough consolidation takes place and enough high of day fake outs take place, then you're going to eventually collect enough longs to offset the number of shorts trapped in the morning. And that's how this breakdown can be fueled. So I just want to make that point clear because a lot of people don't understand this. Is that how is the stock able to dump if there's a lot of shorts stuck from the morning? Well, this is where the long consolidation matters. If the stock only consolidates for like 30 minutes or an hour, that's probably not enough longs trapped to offset the amount of shorts in the morning. But if a stock consolidates for like 2-3 hours, you might have a chance to cancel out these shorts from the morning. So from a short standpoint, the longer the consolidation, the better. Because you need the long consolidation to trap longs to cancel out the shorts from the morning. So does everybody understand what I just said right there? Because I know that might be a little bit confusing. We good there? Okay, good. So let's go ahead and jump into some examples. GNCA on May 31st. Okay, so pre-market highs, you got your breakout, you got your consolidation, line in the sand, air pocket, high of day resistance, high volume in the morning, low volume during the consolidation, and the volume picks up again. Not much, but you know, it picks up. Then you got your crack. Straightforward, right? Now, here's the thing. You see this stuff candle right here? This is where maybe some people might try to, quote unquote, anticipate the breakout, right? Well, they got a rude awakening, right? This is what happens when you try to chase the breakout. So just want to make a point clear here that you don't want to get stuck in that, because look how deadly that drop was, right? People thinking that this is going to continue higher, right? This green candle, oh, this is going to break out. Let's go for it. Green volume, let's do it. Boom. There you go. See you next time. So you want to wait for a high of day breakout, guys. You want to wait for a move over the resistance, over high of day, a clean move, okay? Not just this little perk. Because this little perk a lot of times might just be like a nasty slam, like right here. This is a really bad drop. Look at the stock. It went from like 7.4 down to like 6.3 or something. That's like over a 1 point drop. Imagine if you chased it even with 1,000 shares. You just lost $1,100. Just like that. Because you try to take a gamble here and try to anticipate the move. So you might want to avoid that, guys. Just wait for the clean move. A lot of meat on the bone. If it breaks out, it's gonna be a really epic move. You know, there's no reason to FOMO and jump in and get caught in something like this. It's just not worth it, guys. Look at this dump, and the stock never even bounced back up too. So if you kept averaging down, I mean, you would have lost a lot of money. And I've been there, done that. Trying my best to pass on the experience to you guys, so you guys don't get stuck making the same mistakes I did earlier in my trading career. So any questions on this example, GNCA? This is a pretty good example because it gives you the consolidation, it gives you the breakdown, it gives you the fake breakout, trapping these longs right here, and they all got destroyed quite brutally. Again, guys, any feedback would be welcome. Let me know if some of these concepts are a little bit confusing. I know they're kind of confusing at times. Gadri's Blend asking, so your long entry point is exclusively a tape read hold of resistance that was broken? From the morning, yes. But in the afternoon, it has to be a breakout of high of day and a clean breakout, and then you use the high of day as prior resistance acting as new support. The idea is basically that you want to make sure all the shorts are panicking in masses, and the volume will tell you that. And at the same time, you want to make sure that you got FOMO longs chasing as well. Again, you got the shorts panicking, FOMO longs jumping in as well, and you want to make sure that that breakout level of high of day defends. Because if it goes back down, then the shorts are going to jump back in, and then the longs that chased it will probably sell. So you want to make sure that the bull case, the bull scenario, stays valid. And how does it stay valid? The legit breakout on high volume with all the shorts heading for the exits at once. Longs jumping in, FOMO longs jumping in, perpetuating the long side of the trade. And then you need that subsequent dip, that inevitable dip. Stock's obviously going to pull back at some point to hold at or above that breakout level, which is probably going to be the high of day. Okay, so you want to make sure that all the longs have a reason to stay in, and all the shorts are still in panic mode. Cavius Blint asking, when you decide to take a long if it does not return to that new support, I most likely won't take a long unless it clearly defines a support level above the high of day. It needs to hold high of day. That's the key. The perfect example would be if it holds high of day, and that's an obvious long there. But a lot of times the stock will hold above high of day, and it will define a support level above it. In that case, you have to either use a support level maybe off of a daily chart, or you would have to rely more on tape reading. Those are a little bit more difficult. I would probably size down a little bit more just because it might dump to high of day, and you don't want to get stuck with too much size to that air pocket. Axel Tone asking, would you long or short a pre-market stock that moves pretty predictable to you? No, I avoid pre-market because as predictable as some of these charts may be, you could still get screwed by things like news. Extremely low volume is just a nasty environment. You can get ripped on something really dumb. And I've gotten, burned too many times doing that. So I just rather avoid doing that. And on top of that, pre-market, remember guys, I'm on the West Coast. Pre-market's like 4 or 5 a.m. I'd rather just sleep than to wake up and lose thousands of dollars. So I think that's a better deal for me. I know Short Bear, he's in Germany, so it's like, 2 p.m. for him. That's why he's always up. But I'd rather not forgo sleep and trade into unfavorable conditions and lose my ass. Jonathan W. asking, usually wouldn't take a breakout or breakdown as it happens, right? You wait for the dips to long or pop and short. That's absolutely correct. Under very rare circumstances, I would. I did a slam the other day on... I forgot what stock that was, but that was a pretty obvious one. But it's very rare, though. It's very rare. I'd rather not do that because, you might get stuck in the fake out and you get destroyed the other way. So that's a good question, though. I try not to do that. It's just not worth the risk for me unless it's very, very obvious. Axel Tone asking, how much do you usually pay a day on fees on average? Depends on how many trades I took. Probably like $100, $200. Locates, I try to keep it in the $100, $200 range. Although the locates have been very expensive lately, I must admit, they've been price gouging on locates. A lot of these stocks are higher priced, so usually the stocks are higher priced, they usually charge more. So sometimes locates might be like, $500 lately. But I try to keep it in like the 200 range. Try to locate only the stocks that I plan on trading. I don't locate everything. Again, try not to locate everything, guys. That's how you just end up bleeding out the fees. Brian L. asking, do you ever average down a long position if the air pocket is a bit too big above pre-market highs? How do you account for slippage if it just tanks? So if there's a large air pocket, I would size down to begin with. So that's number one. You gotta assess the situation and size down appropriately, and don't get stuck in something stupid because, hey, that air pocket's there. It's there. You can't ignore it. Do you average down? If I'm sized in small and I could stomach the hit, then maybe. But it depends on how big the air pocket is. If the air pocket's huge, then probably not. So it depends on how big that air pocket is. How do you account for slippage if it just tanks? You just gotta take the hit, man. That's just the way it is. If you're putting yourself in a situation where slippage is an issue, then that's a problem in itself. So don't oversize when you're in a situation where you might get screwed. Let's just put it that way. If that air pocket is huge, don't size so bad such that if it tanks, you're gonna be dinged with slippage and all this bad stuff. So the idea is just manage risk, right? Risk management. I know that term gets thrown around a lot, but in this particular case, you have to be aware of that air pocket and you gotta size appropriately. That's why a lot of times, guys, when there's a long setup and it's well above pre-market highs or it's well above that high of day or whatever, I think on the SLRY I was kind of hesitant to take that long. I think it stalled out at like 25. Let me just pull up that chart real quick. Let's give you guys an example of that. Here, it stalled out at 25 right here, right? So I was looking for a long at 22. You guys remember this day. I was looking for a long against 22. Why 22? Because 22 was basically the after hours resistance right here and also the pre-market highs, right? So I was looking for a washout to 22, but the stock ripped from 19 basically to 26, almost 27, and only pulled back to 25. Okay? So this is where it held. This is the pre-market highs. I was hesitant to jump in here because if I bought here and I got dumped to 22, that's a $3 per share loss. So I ended up missing this move, and you know, it sucks, but that's an example, Brian, of where if you buy here and it dumps, I mean, what are you gonna do, right? In hindsight, knowing that it went to 29, what could I have done? Maybe I could have bought, I don't know, 500 shares or something. I still would have made $4 a share. We could have made $2,000 off the 500 shares. If it dumps 3 points, I lose 1,500. I mean, that sucks, but that's not the end of the world. That's recoverable. So in hindsight, knowing that it went to 29, maybe I could have just taken a smaller position. You know, that's something that could have been observed, but I guess I was too into that whole, you know, this is the morning, this is the open, I'm looking for a bigger win. Wrong mindset, so I end up missing this move. But just to illustrate the point, guys, this is a pretty nasty air pocket. You want to avoid that situation where you're overcommitted at this dip and then it dumps and you lose like huge. So it begs the question whether or not you want to average down. So Brian, your second part of your question is, would you average down on the air pocket? If you average down here, the stock dumped even further. So I mean, if you bought 25, it dumps, you buy here, your average is now somewhere around 24, 23, it dumps to 21. You know, where's the shrug shoulders emoji? I don't know what to tell you, you know, that's like, well, shit hits the fan. You're shit out of luck. All right, Axotone asking, how do you interpret volume? Do you see volume growing when you're long or the other way around? So again, volume helps me determine the conviction behind the move. Okay, so high volume means that there's panic. And there's panic, that means there's a bunch of people, you know, trying to go that same direction, right? A big move, like a big candle on lower volume, tells me that there's less people panicking, and that could just be noise. It could just be one idiot hitting market order, right, and just like causing like a big candle. For instance, right, this volume right here, this breakout, big candle, big volume. This is a pretty legit move, right? This big green candle, big volume, that's a pretty legit move. Okay, so you have some red candles that are low volume. This red candle is on pretty good volume as well, but for instance, this candle right here, let me erase some of these lines so you guys can see it a little bit better. This red candle right here with the big wick, right? This candle right here. The volume is right here. You can see that it's lower than this red volume. So this red candle right here has almost 600,000 shares in volume. Good high conviction move. It continues lower. And then you get this candle, which is trading at 400,000 shares of volume, so about 66% of this one. And guess what happens? It ends up being a wick back. So anyone that try to chase this 22 breakdown, they're like, oh yeah, you know, 22 breakdown, this is the pre-market high, it's going to go down lower. They got wicked back, you know, like $1 a share. So volume absolutely does matter. It tells you the conviction behind the move. Right? Now you have this candle right here though. Low volume, but the next couple candles increase in volume slightly. So when you have that kind of increase in volume, it tells you continuation. So you need to understand what volume means. Volume means conviction. And not just that one candle, though. You need to see continuation. And we're going to talk about some examples later on where they kind of, this is the fake liquidity kind of comes into play here. Where they would fake a lot of volume on one candle and they try to bait people into thinking, oh, this is the high conviction dump, right? And then they follow that up with like no volume. So that's why follow through is very important as well. So with respect to volume, you need not only to have high volume on that one candle, but you need to have follow through volume as well. So we're going to talk about that later on. We saw that a couple times. I mentioned it in chat where I talked about, yeah, high volume, it's going to make that big move, and then it ends up doing nothing after that. And that's where you can get into trouble. So you need to have continuation. You need to have confirmation. You need to have confirmation not only in terms of price action, but also volume as well. Price action and volume confirmation, and that gives you a higher percentage setup. Okay, so you need to have the stars align, guys. You need to have all of the variables line up, and it gives you a higher percentage, a higher edge. So that way you're not kind of left in the dark, so to speak. All right, guys, any other questions? I want to move on, not take too long on this. There's still a couple more examples, more scenarios I want to talk about. This is where else might end up turning into like a 3-hour webinar. Brian L saying, would you take a small scalp position longing that first bounce of pre-market highs? Support even though it's lost as morning push. It'd probably be a game time decision. Maybe if it's an easy read. Sometimes it's not. But you gotta admit that you know that if it's lost that morning push, that's by definition not gonna be an A+ setup. So you got, yeah, you have to go small. The cleanest move is obviously the first breakout, guys, because that's the freshest batch of shorts getting screwed. So understand that, right? The first clean breakout is going to be the first batch of shorts getting screwed. So that's the cleanest. That's going to offer the most panic and the most clean and easy money trade. Same thing with the breakdown. The first breakdown, it's going to be the most obvious and clean trade as well, because that's obviously the most longs that are going to be heading for the exits at once. So understand that. Let me put this game up on the side. Sorry, guys. There's a big game going on. Portugal is playing against Holland. I gotta turn it off. All right. Anyways, next slide. Below pre-market highs. Bearish stays bearish. This is also known as the all-day fader. So all-day faders, this is a pretty easy scenario, guys. This is when it kind of pops and drops and it just fades all day. Easy. Short on pops. Right? This is probably the most simple of the four scenarios that we're talking about today. This is probably another favorite of short bears. He loves this stuff. And from my standpoint, I just like to short pops. This is a really nice, usually offers a really nice panic pop short at the open. And then it's going to be a nice wallet pattern throughout the day. And a lot of you guys that like to swing short this, probably be a nice winner for you guys as well. Those of you guys with PDT accounts that can't, take 100 trades a day. Really nice setup for you guys as well. This is a constant downtrend, lower highs and lower lows. This is one where they won't let the stock bounce. This is why we have this guy right here. Why bounce. Because usually there's like a guy that's just diluting all day. This is usually the setup where where it just can't bounce, man. It just any sort of bounce gets stuffed because there's a hidden seller all day. Again, it's a short on pops. Now there is a downside to this. Sometimes, actually, it's actually more common than you think. But you get the pop and drop, right? And eventually, during lull, it gets this little grind back kind of move, right? This is something you might want to be careful of because a lot of you guys that try to hold this, you know, and then you get stuck adding in this, you get this nasty grind back. It kind of ruins your average, or maybe you cover here and then you get stuck in this and you start giving back gains. So yeah, be aware of this grind back during lull. Usually happens around this 11 o'clock mark. So be careful with that. We're going to talk about some examples of grindbacks so you guys can avoid getting stuck in that situation. This is why I scalp again. You want to avoid situations where, you know, you give back too much unrealized, or maybe you ruin your average, like I said, or, you know, you give back too many gains. But overall, it just grinds back. It ends up hitting at a big resistance level, and then it goes back down. So this is kind of like a reverse line in the sand, so to speak. But usually we might get this kind of chart. So be careful with that, and don't get stuck in this phase of the day. And we're going to talk about some examples of that as well. Volume usually gets low as the day progresses. So again, during lull, the volume kind of decreases. So if you're oversized during this time of day, you might get some slippage. So be careful with that, guys. Volume might pick up later in the day as when it starts breaking down again. If it cracks a low of day, that's when volume returns. But sometimes, you know, if it doesn't crack low of day, if low of day is put in earlier in the day and it kind of just starts fading, then volume will probably stay low. So size appropriately to mitigate the impact of potential shenanigans. Just be careful, guys. Don't get stuck in grindbacks, maybe some market order pops, stuff like that. Axotone asking, when you say short on pops, does that stay valid until it breaks pre-market highs, or when it starts making higher highs and higher lows? So if it breaks pre-market highs, I wouldn't be shorting on pops unless we get that previous scenario where we have a line in the sand defined. That's the only time where I would be shorting, quote unquote, on pops if it's above pre-market highs, if it cracks that line in the sand. But in this particular case, it's a short on pops. Basically, until it starts, it starts doing the low volume. Low of day is put in, number one. Once the low of day is put in and it starts making higher highs and higher lows, it's probably no longer a short on pops for me. Usually the volume gets so low anyways that the volume would turn me off of even trading the stock to begin with. So that's a sign. Remember, guys, I'm not here to trade this all day. I'm looking just for fast moves and high volume. So without volume and fast moves and this grind action, I would probably leave to begin with. So I wouldn't be sticking around for this anyways. So how do you avoid this? You know, once you notice that the range is gone and the volume is gone, just don't trade it. That's how I avoid getting stuck in these grind moves. You guys hear me talk about the term avoiding grind backs all the time. This is how I do it. Volume, range, no more volatility. I'm not going to be trading it. So King's Man Trader asking, can you explain a stuff move? So a stuff move is what we just saw previously in that example with OTLK. Or what was it? OTLK. Was it OTLK? Which one was it? GNCA maybe? Or was it? Yeah, there we go. GNCA. A stuff move is basically a fake breakout. This is your stuff move. When the stock tries to break out and then it just gets slammed back down into a wall of sellers. That's a stuff move. So it tries to go up and then it slams back down really quick. So basically, if you want to try to discuss what's going on here, the bulls try to make a push and they run into a wall of sellers and it just gets slammed back down. So that's a stuff move. Does that answer your question, Kingsman Trader? Brian L asking, do you look at the candle at the open and then at level 2 once it creates a wick for a potential panic pop entry, or do you focus on level 2 right at the open? So I focus on level 2 90% of the time. I say this over and over again because that's really what I do. With regards to the chart, I already know what the chart looks like. I know where the pre-market highs is. I know where the high of day is. I know where the supports and resistances are. I already kind of have I memorized the chart basically in my head. I know what to look for. I'm basically looking at the level 2 to see how the stock behaves at those support and resistance levels. That's it. And I try to look to see if there's like a wall at pre-market highs, or there's a bid prop or whatever, and that's how I determine whether or not to take the trade. So I'm looking at the level 2, but I already know what's on the chart. So if you're not at that stage in your trading career where you can memorize the chart or whatever, and you have to reference it a lot more, hey, there's nothing wrong with that. But it's just, for me personally, I've been doing this long enough, I just can look at the level 2 and know exactly where I am on the chart without having to refer to the chart constantly. Alright guys, so let's go ahead and jump into some examples of this particular case. This is, again, a very straightforward one. I think we're going to not dwell on it too much. But let's talk about some of these examples. We had a lot of these lately, actually. A lot of ones that like ran, pre-market and just dumped, right? This is a pretty obvious one. We don't have to really talk about it too much. Again, you can see that pre-market highs, it never got over it. And again, Kingsman Trader, this is your stuff right here. Panic pop, short stuff. Short on pops. Short on pops. This is the line of the sand from the morning, right? So the stock bounces. It attempts a grind back, sorta, right? This is a little bit of a grind back right here. Stock dumps, a little bit of a short cover grind back. So, some people that try to slam lows here. Again, guys, be careful. Once the low of day is put in, higher highs, higher lows, don't get stuck in this, okay? There was a question asked earlier about that. How do you know to avoid that stuff? Decrease in volume. Again, low of day put in, higher highs, higher lows. A little bit of a grind back. Resistance now forms. Now this is the line in the sand. Line in the sand cracks. Volume comes back a little bit. And then you got a little bit of chop. And no volume for the rest of the day. Because basically the stock never really cracked with conviction this low of day from the morning. So there was no more like major flush type of action. So the volume never came back. So you can see what I was talking about on the PowerPoint presentation, where I said that volume gets low as the day progresses. You can see right there, volume got really low because there was never really any more big flushes of any other critical levels aside from this line of sand right here, which briefly brought the volume back. And this is not even that much, but you guys can see what I'm talking about though. So let me know if you guys understand this example. It's pretty straightforward. Pretty straightforward. Define levels, clean move. We made some good money on this. Next example, GNCA. On 6/3, we talked about GNCA, but we're going to talk about GNCA the day after. Same thing. You got your pre-market move, dumps all day. You got your little stuff right there. You got your little channel right here, a little bit of a grind back, line of sand crack, and the bleed out, right? You got a secondary little line of sand there. So you see every single time the stock breaks some sort of consolidation, so there's a little bit of consolidation, the volume returns, right? You see that? So look, high volume in the morning, volume decreases, low volume here, which coincides with this consolidation. So you guys seeing the pattern here, right? Consolidation or indecision, sideways, whatever you want to call it, usually results in low volume. Why? Because people don't know what to do. It's a Mexican standoff. People are just there like, well, I have no reason to stop out. I have no reason to get in. I'm just going to hold or whatever. Low volume. But when the stock starts to show its hand a little bit, cracks this level, the volume returns. So you guys seeing a trend here, right? Yeah, I'm going to zoom in a little bit here. Let's zoom in a little bit. Zoom in a little bit. There we go. A lot better. Okay. So you see the volume gets really low. Why does the volume get low? Consolidation. Right? Crack. Here's the crack. Volume comes back a little bit, but more consolidation. Volume gets low again. Crack. Volume picks up again. Right? And it just bleeds out. Now you see, notice the bleed out. It's on kind of choppy bleed out, right? No real panic pops, just chop. Right? Low volume. So we got no more panic moves throughout the day. Just chop, grind. The volume only picks up very briefly during the cracks, and that's about it. In the morning, this is where the liquidity is, and this is where you can actually size up and take advantage of these big moves. And this is why I like to focus on the morning, guys, because this is where I can make a nice $1, $2 a share on these moves. And there's enough volume for me to go in some, decent size. But this chop action, you can play some of it, but the volume's too low. I can't go in size, and this is why I usually just kind of ignore it. But for those of you guys that are intraday swinging this, obviously this is a great move if you can hold through this entire time. But for me personally, I can't hold 10,000 shares the entire day because I can't risk trying to get out in this low volume and then getting stuck in some stupid move, and then I won't be able to get out. So for me personally, do I really want to sit there all day and hold like 1,000 shares or 500 shares? I don't know about that. I don't know. That's just me personally. I know some of you guys with smaller accounts, if you're holding 1,000 shares, that's a good chunk of change. But I'd rather just play right here when there's still action. Make my couple $1,000 and then maybe pad the wallet with some of these pops with smaller size positions, and then just avoid all this low volume stuff, because I just don't want to get stuck in some one guy hitting market and then ripping the stock like $1 or $2 a share or something, and I'm in like 10,000 shares. Obviously that's a lot of money, so I don't want to be stuck in that situation. So this is an example. Bearish stays bearish. Hopefully you guys understand that. Let me know if you guys have any questions. Another pretty straightforward example. Again, this is the most simple setup. It's basically just a short on pops all day. Yeah, a couple of you guys asking a couple questions. Let me know. Alright, so let's move on to the next example. RWLK. This one was kind of annoying because of the stupid offering news or whatever it was. So it did the grind back at the open. But it topped out below pre-market high, so by definition this is bearish. It falls a little bit, and then you got your low volume right here, which resulted in this grind back. But overall, this is a downtrending stock. So I wanted to talk about RWLK because this one is a little bit less straightforward than the others. But overall, if you kind of look at the volume, you can know when to avoid the grind and chop. So low day was put in right here. And you got your higher highs and higher lows and diminishing volume. This is how you know to avoid this chop. And it also coincides with, obviously, trader nap time, right? So the morning, again, it was annoying, of course. But, again, consolidation here. Low volume. Right? And then it tops out right here, which coincides more or less with this level right here. But the stock tried to bounce from the morning. And it tops out right there, and it starts downtrending again. Again, notice that the stock never cracked low of day, and the volume never picked up. So there was never any like major critical level crack. Again, you guys notice the pattern there as well. If there's no big crack, the volume never returns. The volume picked up right here because this was the low of day up to this point. So the volume picked up briefly right there. Because the volume didn't pick up again, it's because the stock never cracked further. The low day was put in, grind back, no more cracks, volume never picks up. So this is an example where the stock technically by definition was bearish, but it wasn't exactly the most straightforward trade because there was just so much chop and grind and sideways. So overall, you want to avoid this kind of scenario just because you don't want to get stuck in this stuff. It's just a pain in the ass, for lack of a better term. Again, low volume, guys. Volume is just a recurring theme here. Low volume usually results in less favorable setups. Grinds, chop, sideways, consolidation. You want to play when there's panic. Low of day crack, short this pop maybe. Ride it down a little bit. Avoid this. So this is where I would be trading it. But not like this kind of action because the volume is just too low. So any questions on RWLK before we move on to the next example? Okay, good. VLRX, this is a good one. I know Short Bear loves this one. This one was the one where got a really nice fade off of it. Look at this. This is a really good fade. But we got the the run there, after hours, pre-market highs, after hours highs as well. It just dumps. Look at that. It's a pretty straightforward one as well. Dumps. Support right there. Support crack. Low volume, volume returns, and then the stock basically just has no volume the rest of the day because there was never really any more violent bleed outs. The move was already made. I mean, the stock went from 5 to 3 already. So, but this is another good example. Bearish stays bearish. Short on pops if any. High volume. Notice the same volume patterns, guys. High volume up to the open. Low volume during the consolidation. Volume picks up again during the low day crack. And low volume throughout the rest of the day because there's never any other violent move. So again, this is the most simple scenario. Short on pops, pad the wallet. I don't remember exactly where I traded this. I think I didn't chase this because there wasn't enough pop. I probably shorted this pop. Probably shorted this pop and these subsequent moves. Miko asking, so then when it comes to 2 p.m., you're pretty much just avoiding most of the all-day fader moves because of the low volume. I don't completely avoid it. I mean, if there's like a big panic pop on low volume, I might jump in with like 500 shares and it's like a really obvious panic pop to resistance. I might jump in with like 500 shares. Like, for example, this pop right here, right? This is a pop to an obvious level because this is the line in the sand from the morning. So even though the volume is low right here, I might scalp this, and make like a quick $100. But in terms of actually taking any trades with size or anything like that, no, I wouldn't do that. Just because of the risk of getting stuck in some, air pop or skip up or something stupid. It's just not worth it. But if it's something obvious, yeah, I'll still take it with like 500 shares or whatever. I mean, I've been around long enough to know what happens when you're trying to trade low volume, man. It's just a lot of trouble, man. Axotone, do you short stocks that are under 1 million? I do if the setup is there. That's the rule of thumb. If there's a trade, I'll take it. If there's a trade on Apple, I'll take it. I'm here to make some money. You know, I'm here to trade whatever it takes to make money. If there's a trade on Apple, there's a trade on Amazon or some big cap stock, and it's obvious, I'll take it. I'm not gonna limit myself to, you know, certain types of plays. I know some people say I don't short stocks below 1 million. It's because they just probably don't understand how it works completely. That's why. But if you understand how it works and you have a plan, you can trade anything. Just manage your risk accordingly. That's it. You're gonna trade like, you know, a gazillion shares on a less than 1 mil float stock, then that's on you. You better know what you're doing, or you might be asking for it there. Okay, guys. Let's move on to the next example. Okay. This is the last of the 4 scenarios. So this is an all-day failure that comes back from the dead. And I couldn't really find any, like a lot of good examples with this. I only found OBLN. And I'm sure a lot of you guys remember OBLN on that day. That was nutty, man. That was freaking insane. I got dinged on that one too myself, so that's why I wanted to talk about it. But this is the all-day fader that looks like an all-day fader, and it just comes out of left field at the end, at the very end. And I want to make this distinction that this is not the play that comes back from the dead, you know, during lull or in the morning. But I'm talking about the ones that come back at the very end. And again, this is rare because of the amount of bag longs. And it takes a lot to obviously cancel out all those longs. The amount of shorts trapped need to offset all of them. It's going to take a lot of shorts that are holding to the end of the day, panicking in the masses to cancel out the longs. So this is a very rare scenario. That's why I only found one example. It's more common when there's fake liquidity and fake volume because that means that there's not as many bag longs as it may appear. And you know, it looks like there's a lot of bag longs, but because of the fake volume, there's probably not really that many longs stuck. It's easier to manipulate, to manufacture that squeeze from hell because of the fake volume. It could be a stock that creeps up and grinds back first. And could be a stock that consolidates for an extended period of time. You know, greedy shorts that don't cover, hold a full size to the end of the day, what have you. So this is basically a stock that kind of does this. Looks like a short on pops, and then whoops, what the hell just happened? Okay, it's rare for a stock to blow through all these resistances, but it does happen. And we're going to talk about it on OBLN. Okay, this can get you in a lot of trouble. If you don't stop out, and you start adding, you know, oh, let's add here. It's going to top out here or here. You know, it can happen to you guys. So let's talk about it. OBLN. There we go. All right. Look at this stock, man. This is so brutal. So, you got your levels right here. Breakout. Looks like a long, chops around, dumps, no bounce on the dump. Everyone thinks it's probably gonna go back down to 0. Starts chopping, grinding. Oh, what the hell just happened there? This is brutal, man. So, in this particular case, first of all, look at the volume, right? You gotta look at the volume and see what's going on. You got your low volume during the chop and grind consolidation. And then all of a sudden the volume starts picking up. Now, you gotta understand that there's basically more or less an air pocket right here, because there's some intermediate support and resistances here, but you gotta understand this is where the crack happened. This is a line of sand crack, so to speak, that resulted in this dump, right? And then all of a sudden, this is where it found support. There's a little bit of support resistance right here from the morning, But if you think about it, there's a little bit of an air pocket right here, right? Now I know this is a $1 stock and this is like only 25 cents, but 25 cents on a $1 stock is pretty substantial. So you gotta understand that if you're adding short repeatedly into this air pocket, you're risking obviously getting squeezed. Now, who am I to speak, right? I got stuck in this myself, but in hindsight, we gotta understand and evaluate what happened and learn the lessons here. So what happened was the reason why the stock did this was because there was an air pocket, and I guess I kind of missed this and kind of looked at these kind of soft resistances as not part of an air pocket. But if you think about it, this stock did not have a bounce really from this drop on the line of the sand crack from $1.30 basically all the way down to like 80 cents. So you're talking about a 50-cent drop on a $1 stock, which is very substantial. And there was really no bounce. And once the stock found support and it started grinding back, the reason why it started really violently skipping up at this level is mainly because of this air pocket. You know, all these grind back, soft support and resistances carry less weight than line in the sand support and resistances. So I get this question a lot, like how do you know which support and which resistances are more important than others? The ones that get tested the most are going to be the most important, guys. So this one's going to be important because this is the line in the sand. This is where the consolidation and the dump started. Okay, so yeah, exactly. There was a double air pocket here. So basically, there was a double air pocket. Again, guys, this is a very rare scenario. It doesn't happen that often, but if you get caught in one of these, this could be catastrophic, which is why we have to talk about it. So this is something we gotta really break it down and understand what happened. So there's an air pocket here on the long side, but because of the no bounce, this is the last hard support now acting as new resistance, right? Then you got this level right here, which was tested from the morning. This is more or less about pre-market highs, not pre-market highs, but pre-market resistance. There's no real support and resistance between this and this other than these kind of chop and grind soft support and resistances, and they were obviously not respected as much. So just make a note of that, guys. Make a note of which support and resistances are key and understand which ones carry more weight than others. So don't add repeatedly into soft supports and resistances because they're going to be least likely to be respected and they're more likely to get the silent treatment, so to speak, right? So a lot of people that don't understand, like, why did this resistance just get blown right through? It's because it's a soft resistance. Hard resistances are a lot more difficult to blow right through because there's so much volume above this level. Yeah, further testing, high volume, things of that nature. It's really volume. Volume is really what you're looking for. But more or less, the easiest way to spot it is the multiple tests, because multiple tests usually means volume accumulation. So the key thing here is basically you have to virtually stop out right here. This is probably the last, like the $1 mark. That's basically the stop out point. If you kept adding into this, then you got destroyed. So I just want to make a point and talk about this example. Hopefully you guys can avoid that in the future. The concept here being soft and hard resistances and making that distinction. So any questions regarding this before we move on to the next slide? Okay, good. Really glad to see that you guys are understanding this stuff, because I was kind of concerned that maybe it'll be like a little bit too much to handle. It's like a lot of information. I tried my best to put in a layman terms as much as possible so you guys can understand. And with these examples on the charts, help you guys visualize exactly what I'm talking about, because obviously just the words on the PowerPoint aren't going to really mean much. But good to see you guys are understanding The questions that are being asked are good questions, so that's good stuff. All right, let's talk about this. Yeah, I actually made that, so you know, I'm not gonna toot my own horn too much there, but I actually made that. That's an original meme, guys. That's a Madaz original meme. All right, afternoon news, PR, chat pumps, scanner plays. These are stocks that usually can have a mind of their own, okay? Usually the reason why is because there's some front running. Let's be honest. These guys that are releasing news, they know the freaking news is going to be released, guys. They're going to freaking load up and then dump into the news, right? Let's be honest. Nobody's playing fair here. There's going to be front running. There's some sort of manipulative agenda. Causes the stock not to behave like a typical stock would behave. Not rational. Examples of that being like a no bounce on dumps, even to obvious support levels. Stock rips and doesn't really dip, even at obvious resistance levels. For this reason, it's pretty much an avoid for me, unless there's some clean, obvious continuation with volume, and it actually starts respecting obvious support and resistance levels. And that's the case, then you could treat it as a simple momentum stock. Regardless, though, downsize, just in case it does something stupid, guys. Just be careful with these news plays. They tend to just do some really weird stuff. I've lost a lot of money trying to trade this stuff, and you know what? I just gave up and just, you know what? Forget it. I'm not gonna trade this new stuff. Leave it to the degenerates. You want to gamble? Be my guest. I'm not gonna lose money on it. MaxR was a recent news one. This was a popular one. So this was one that picked up late in the day. No volume, and then all of a sudden, why the volume? Because there was a PR that they were gonna, you know, do whatever it was. I forgot what it was. Who remembers what the news was on MaxR? Because honestly, I don't really give a shit enough to remember. If you guys remember what it was, just post it in the chat. But in any case, it rips. You guys can see, right? Resistance right here. No, it doesn't care about resistance. Who cares about resistance? It just rips through resistance. No dip. Look at all these green candles. Minor dip here, and it just keeps going, keeps going, keeps going. Right? Finally dips a little bit there, but it still keeps going. I think there was a halt right here too. I think what happened was it halted to the downside. I think I remember, right? It halted to the downside. People thought this was gonna go back down, and then it like rips. This, look at this green candle, man. Holy shit, man! Seriously, people thought it was done right here, and they got stuck in this. I mean, I think this was a halt resumed, and it skipped up. I think it was like a T1 or something. But you guys can see the shenanigans here, right? If you shorted into this, you got squeezed here. Pretty brutal squeeze. You thought this was the top. You slam this, you get squeezed again. And all of a sudden, okay, fine. Maybe I could, you know, long dips or something. You get, you know, this choppy consolidation. The stock just does nothing for a long time. It's like a tense moment. What's it going to do? Is it going to dump me? Is it going to rip me? I don't know, man. All I can tell you is one thing's for sure. Afternoon trades equals headache. That's all I can tell you. I'm not gonna mess with this. You know, if some of you guys try to trade this, that's fine. But for me personally, from my experience, I don't know, man. I don't know. So any questions on MaxR? Pretty straightforward. You can see the shenanigans there. Man, but still, just looking at this, man, this is brutal. People that try to short this and got stuck in this candle. It's like it went from 8 to 9 in one candle, man. That's nasty. That is brutal. Some of the people that just joined, can you guys post a link to the webinar so they can join? I'd like to at least give them a chance to ask questions and stuff like that. Thanks, guys. All right, other example, I'm going to talk about DMPI. This is one that was fairly recent. I don't remember the news on this one either, but took off. You can see halts, a rip with no dip, and then all of a sudden it tops out and it dumps from 575 down to 3. Look at this, man. That's nasty. Look at the next day. Look at that. I think it was an offering or something too. So you can see the same shenanigans, right? It rips, no dip. If you try to short this, you got destroyed. And then you try to buy the dip and then you get dumped. Maybe you try to buy a dip there. High of day break. Oh, let's buy the dip there. Oh, you get dumped. So a lot of nonsense, man. A lot of nonsense. Could you potentially have nailed this short? Sure. But how do you not know that it would have went to like $6, $7, $8? You know? It's just not worth the risk for me. Late in the day, you know, usually this is the part of the day where I'm already locked in some profits from the morning, and then, you know, you do something like this and you start giving back money. It's just frustrating. So again, a lot of people might be like, oh, this is like a chat chase or whatever. It's a pump job, short here, get ripped, try to buy the dips and then get dumped. It's just not worth it. Can you do it? Sure, more power to you if you can, but do you want the headaches? Sooner or later, you're going to get stuck in one that doesn't behave the way you want it to, and it's just not going to be fun. So any questions on this? This is a very simple scenario, guys. It's like a more or less giving you examples of what can happen if you get stuck in something stupid on these news plays. It's an avoid situation for me. I don't bother with it. Pretty simple scenario. All right. Exactly. More of the reason to do so. Take off. Charles Crust saying, my main takeaway is to just take off the afternoon. You can still make money. You just got to size appropriately and really pick your spots. And we're going to talk about the concluding thoughts shortly. So let's talk about fake liquidity. This is a hot topic lately. I've been talking about this a lot, and I'm pretty sure a lot of you guys aren't 100% sure what fake liquidity is. Let's talk about it. So fake liquidity is when the stock starts behaving very, very irrationally. Very weird price action, lots of sluggish, choppy, grindy price action, even when their stock has high volume. This is when you have market maker ping pong. This is a term I get thrown around a lot. You know, this is when the stock is kind of kept in a range, deliberately kept in a range, most likely just to trap people one way or another, long side, short side, whatever, so they can push their agenda. So they want to trap long so they can dump shares, or they want to trap shorts, you know, so they can, you know, dump their shares as well. It depends on what their situation is, you know, what their agenda is. Supposedly supposedly low float stocks trading very thickly. We've seen a couple of examples of those as well, where a stock, you know, has like 1 million float and it trades like it has like 1 billion float. Doesn't make any sense, right? That's because market makers are just creating the illusion of volume by just playing market maker ping pong again. They're just trading back and forth with each other. No real traders are actually trading it. Very high infinite dump and squeeze from hell risk. Right? These are stocks that can rip out of left field or just dump because, you know, the manipulators decide to pull all the bids and offers, you know, get the skip up type action, right? There's no real traders, there's no real volume. It's just the manipulators. So all you have to do is just pull the rug, and then there goes that. And any sorry sucker that happens to be in it when they do it, well, you're shit out of luck. No bounces even on large drops to key support levels. No dips or pullbacks even on large spikes or key resistance levels. Right? Because again, because there's no actual real traders trading it, it doesn't behave like a stock where there are real traders trading it. No surprise. Very inconsistent volume, unable to sustain any volume over the volume criteria for extended periods of time. Okay, so this is where a stock will just have like a lot of volume and it follows up with no volume at all. We've seen that a lot of times as well. Erratic volume spikes. followed by immediate volume drop-off. I'm going to come up with an example with that shortly. You guys are getting the idea, right? Lots of these, we've seen a lot of these lately, and we see clues, some clues of how some of this fake liquidity comes into play and how it impacts the tradability of the stock. Lots of spoof bids, a lot of big bids and big offers. These are mainly used to, you know, bait or entice retail, meaning guys like you and me, to provide real liquidity for them to push their agenda. So there's no real volume, so they got to create it artificially. How do they do that? Try to scare people with big bids and big offers one way or another to get them to place real trades and provide real volume into the stock so they can do whatever they want with it. We talked about the risk of getting skipped up. Why? Again, no volume. There's no real traders. All they have to do is pull all the offers and it'll skip up, and pull all the bids and it'll skip down. Right? What does that happen? Any sorry sucker that's in, they're going to have to get stopped out. So let's talk about ELTK. This is probably the best example I can think of. Before I go into the example, any questions? Because I know this is a little bit more of a gray area, a little bit more abstract. But those of you guys that have been trading with me every single day, that have been part of MadazMoney, been part of our trading community, listening to the mic sessions and listening to me talk about fake liquidity, probably have a general idea of these clues that we've been talking about now that's on paper on this PowerPoint presentation for you guys. Do you guys know what I'm talking about? You guys can kind of put two and two together and compare it to the action we've been seeing and spot what the fake liquidity stuff is now. You guys, basically, do you guys understand so far up to this point, based on just what we've been talking about in this presentation so far, without the example yet, do you guys understand what fake liquidity is? Excellent. That's awesome. When MMs exchange shares, do they pay fees like we do? No, they just trade. They just trade among. They just trade amongst themselves. So I mean, they give themselves the best fills. They get all the rebates. They're not paying the same fees as us. I'll tell you that much. MMs place like millions of trades a day. They're not paying fees, man. Yeah, I forgot to add that actually. When you're not getting filled too, that's fake liquidity. When the volume looks like you should get filled, and you're not getting filled, that's how you know for sure. That's fake liquidity. That's fake. Knowing fake liquidity from experience. These are more points from just observational standpoint. But once you're trying to get in and you're like, okay, there's like clearly enough volume for me to get in and fill 1,000 shares. Why did I only fill 300? Makes no sense. If there's like, you know, an offer of like 5,000 shares and you whack it with like 1,000 and you only get filled 300, something's not right. So that's a clear and obvious sign that there's fake liquidity. And I actually spelled this ticker symbol wrong. It's ELTK and not ETLK. Just want to make that point in case you guys are following along. ELTK is the correct ticker symbol there. So yeah, if you're not getting filled when you feel like you should be, that's a dead giveaway that there's fake liquidity. Had that experience the other day on one of the stocks. Forgot what it was, but I tried to buy 5,000 shares at the open. I filled like 1,300 or something, and that's how I knew after that to just size down immediately. After that, I started trading like really tiny size. So ELTK both days, a lot of really weird action, man. A lot of really weird action. You can see the skip ups, right? Look at all these big candles that come out of nowhere. Big green volume, and then immediately after that, no volume. Big green volume, big green candle, big green volume, no volume. Usually when you see a breakout of this level, you would expect to move higher, right? You would expect maybe a rip, a dip, and a move higher. But instead, you get this choppy grind down. What the hell is that? What the hell is that? That's not normal. So this stock is already not behaving the way I expected to trade. And thankfully, I took this day off because, you know, who knows? I might have tried this and gotten stuck in this stupid grind down. But nonetheless, you guys can see what I'm talking about, right? You get the skip up. This is probably the best example on this particular chart. Good volume, 800,000 shares. Hey, that's great. That's over the volume criteria. That's great. Let's look for the dip. Dip there. But why is the volume dropping off so much? Why is this bounce attempt here around 1230 off of this dip so weak? Right? Why is that? Why is the stock just bleeding out after what seems to be a high of day break where all of these shorts should have been stuck and stopping out? Why is that? Fake liquidity, guys. Fake volume. This is all manufactured. Look at all this action. Look at all this chop. Chop, chop. Aside from these skip ups. Skip up. Skip up and skip down too. What the hell is this? People are just getting destroyed, getting chopped up, and just really nasty stuff. Inconsistent volume, guys. Inconsistent volume. Now, I wish I had the tape for this one, the level 2. You can probably find some more hints on the tape as well. Probably a lot of fake big bids here triggering these moves. Probably a lot of offer pulls. But you guys can see. Low volume, no continuation, a lot of chop, a lot of moves that don't make sense. High day breakouts not giving us a bounce and further rip. Grind downs. Makes no sense. To me, this makes no sense. Very dangerous stuff. Very dangerous stuff. So any questions regarding day 1 of ELTK before we move on to day 2? Day 2 is a good one. I remember that day. Wasn't even trading and I was feeling the pain. Let's look at it. Oh man, look at that. Yep, even more shenanigans on day 2. More skip ups in the morning. Skip ups, skip ups. Look at this chart, man. Look at this, man. Look at this. What is this, man? People could have gotten like people could have blown up like 7 accounts or 10 to 100 accounts during just this. Oh, that's long here. Oh, I got dumped. Oh, that's short here. I got ripped. Look at this. Look at all this. Look at this magnitude of these candles, man. That's some brutal stuff. I tell you. But the point I want to talk about is this move right here. Holy shit. Oh, it's a new high of day. Let's go long. Nope. What is that? That's some ugly stuff, man. Ugly stuff. And look at the same thing. We got the chop. Low volume. Seemingly high volume here. This looks pretty good. 500,000 shares. Let's go long, guys. 500,000 shares. That's above the volume criteria. Just made a new high of day. We had a question earlier about, how much of a, how do you tell if it's a legit breakout or not, right? Right, there's a previous high of day was what, like 11.30. It only broke out by like 26 cents, and this is $11 stock, guys. $11 stock breaking out by 20 cents. That's nothing. What is that? Like a 2% move? That's not gonna cut it. This thing needs to rip to like 12, 13 bucks for it to be clean, man. So we know better here at MadazMoney. We don't chase stuff. We wait for things to cleanly break, and this is not a clean breakout because it's not enough. So anyone that just went off of volume, went off of just purely by high of day, got absolutely wrecked. This thing dropped from 11 and didn't even bounce until it got to like 850. 1,000 shares would have lost you $3,000. 1,000 shares. Guys, that's, I mean, out of words. Out of words. But the bottom line is these guys were just trying to trap people. Fake liquidity all the way. They're basically just trying to trap as many people as they could during this consolidation by playing market maker ping pong, right? Look at these candles. They don't look natural. These wicks don't look natural. These wicks are just the market makers just pulling the bids and offers over and over again to get people to chase one way or another, right? I mean, look at how many wicks there are. This is not a normal looking chart. Like a normal looking stock would not have so many wicks. These are people chasing getting stuffed. These are people chasing getting stuffed over and over again. And once they finally get the perfect number, the magic number of people stuck, they pull the offer, resulting in this big green candle, right? Get everyone to stop out, and then dump everything in the kitchen sink on them. Exactly. You had no chance, man. By the time you reacted, you were probably already stuck in the 11s if you were short. So again, guys, this is why it's so critical to not take a gamble during the consolidation. Sleeping and rejuvenating yourself, it's so much better than getting stuck and blowing up, guys. Trade or nap for the win. Like, honestly. Trade or nap for the win. This is why I'm passed out on my bed during this time. And if there's any doubt left in the validity of the trader nap, I'd love to hear it. I'd love to hear the counter argument to that because, man, I think sleeping is better than losing money any day. So, any questions regarding fake liquidity? I know the only missing component here is just not having the level 2, which would have been helpful for sure. But on the level 2, just look for the bid props, the big bids, the big ask walls. And just look for some weird choppy stuff, man. Choppy price action. I know ELTK was a relatively low float too, but look, it's trading so thickly at times, and then at times it's trading so thin. It's so weird. So just be aware of that, and also be aware of the skip-ups. From a charting standpoint, just look for inconsistent volume. Looking for some weird, wick, multiple wick kind of candlestick formations like this. It just doesn't look natural. Inconsistent volume, breakout followed by no volume and a dump. So hopefully this is enough for you guys. I know I just didn't have the level 2, but I hope this is enough for you guys to at least recognize from a charting standpoint, and also from the bullet points on the PowerPoint to recognize the clues on how to avoid this stuff. But it all starts from having the discipline to not chase and not anticipate moves. Because people that try to, take trades during this consolidation, they're going to get destroyed. No doubt. Alright guys, so any questions regarding fake liquidity before we move on to the next slide? So some general tips about avoiding shenanigans next. We're almost done. I know some of you guys want to start the rest of your Sunday here. Pretty important slide, guys. Take note of this. If you guys watch this later, make note of this. I don't want to see any of you guys getting hurt from getting stuck in these games. Alright, general tips on avoiding shenanigans. So overall, when a stock seems to have a mind of its own, it doesn't respect a lot of conventional technical analysis. So if it doesn't give a shit about support and resistance, probably keep your distance. Okay, guys? You can't trade a stock if it's basically forcing you to gamble. If it's like tempting you to get in and teasing you with these big moves, but it doesn't make any sense, probably just want to stay away, man. It's just not worth the risk, not worth the headache. Choppy, erratic, unpredictable price action, infinite dump squeezes from hell, like we just saw in ELTK, a bunch of big candles that made absolutely no sense, no follow through in one direction or another, directionless action. Just nothing that's tradable, nothing that's favorable for us with any edge for us to get ourselves involved in something like that. Avoid 50-50 trades. Consolidation. Avoid that. Avoid a stock when it's range bound, when there's no direction, no clear trend. Because that's when the market makers and the algos are going to be there to try to trap people. And once they have one side trapped, that side's going to get destroyed. You don't want to be part of that. You don't want to be part of the people that get trapped in and get hijacked by the MMs. You don't want to do that. Size appropriately, proportional to the volume in the afternoon. Volumes, obviously, as you guys saw in the examples, it's going to be lower. Lower volume means that there's going to be higher chances of, stupid stuff happening. So you got to account for that. Can you still trade? Yes, I still trade in the afternoons, but I trade a lot smaller size. Okay, so that way if I get stuck in something stupid, I'm not blowing my profits. Do not chase breakouts or breakdowns. Allow it to cleanly break first. I talked about that multiple times. ELTK. Not going to pull up that chart again. You guys saw that example. What can happen if you chase a breakout or a breakdown? Respect stops. Do not add infinitely. We saw that example on OBLN. What can happen if you add to your short infinitely? You get destroyed. You got to respect your stops. You got to identify where are the hard supports and resistances and respect them like it's the last thing that, that's your life depends on it, okay? Respect them like your life depends on it, because that's honestly could be the last thing you see before your account goes to zero. Seriously. I mean, a move like OBLN, and you're oversized and you keep adding, it's deadly stuff. And a way to do this is to predetermine a max share size you're willing to go in and space out your ads at predetermined support and resistance levels, and don't exceed that max share size no matter what. So if you say, okay, I'm going to go in, I don't know, 5,000 shares or something like that, don't all of a sudden mid-trade double up that 5,000 to 10,000. Next thing you know, you're in like 20,000 shares on a stock like OBLN and you're down like 10 grand. So don't do that, guys. Just predetermine ahead of time how many shares you're willing to go in, where your risk parameters are, and don't deviate from them mid-trade, because that's how you're going to get destroyed. Okay? Power hour. I want to talk about power hour and some of the shenanigans that go on there. All day hold shorts, greedy shorts that don't cover, when they all stop out at the same time, it's going to cause a spike. We've all seen that. Margin calls. This is something that typically takes place in the last 30 minutes or so. Brokers start, margin calling people. If all the brokers do it at the same time, it's going to cause a spike. If you're stuck short, you're going to get stuck in that. Market makers reshuffling order books. A lot of times market makers start to reshuffle their orders at the end of the day, their books at the end of the day, and that's going to result in some really weird stuff, man. Really choppy price action, pin price action, just really weird stuff that you don't want to get stuck in. So this is why I don't really bother so much in power hour unless it's something really clear and obvious. Last minute news or PRs. If you're logging something and all of a sudden there's an offering, sorry, you just lost a shit ton of money. I've been there, done that, man. There's stocks that were clear longs and all of a sudden offering. I mean, I've been through it all, guys. It's just some nasty, ugly stuff. And I just want to tell you guys all this stuff and share my experiences so you guys don't get stuck in the same thing. So pin price action is basically when a stock just doesn't move, right? It just starts doing this. UXIN kind of comes to mind, where a stock just flatlines for a very extended period of time. Usually because there's some reason why they want to do that. Maybe they got to close it at a certain price, so they manipulate it to close it there. But usually when that happens, the stock just stops moving. So that's pinned price action. So any questions on avoiding shenanigans, general tips? The power hour stuff is probably something I haven't mentioned before. Margin calls, shuffling order books, things like that. They do absolutely impact price action and definitely make things very inorganic. So let me know, guys, if you guys have any questions before we move on. The last slide is next, so we're basically done here. Try to keep it under 2 hours, but man, it always ends up being 2 hours. But hopefully it seems like you guys are participating and really taking in the information, which is good. This is definitely a lot of information. I worked really hard in this presentation because it's really hard to explain some of this more abstract concepts. So I try my best to put it in layman terms without getting too technical with the mumbo jumbo and the terminology and stuff like that. So, all right, guys, let's go ahead and jump to the last slide. Last slide, guys. We can go home. Okay, concluding thoughts. And this is a culmination of all of the webinars put together that I've done so far. So webinars 1, 2, and 4. This is the third, again, the third in the trilogy. The third webinar in the trilogy, opening bell setups after the opening bell. We're skipping low because that's trader nap time. I'm not going to chop myself up, and afternoon setups. So these are the time of days when I usually trade, and this is why I have webinars created for them. So that way you guys understand my thought process and how I trade and how I approach these parts of the day. And these are the concluding thoughts for not just this webinar, but all 3 of them, okay? So the best action, giving us the most opportunities, most likely going to be at the open. Why? We have the biggest range, the biggest volume, the biggest volatility, the most liquidity. Therefore, this is where the big money comes. Okay, guys, this is where the big plays are most likely going to happen. Because I can go in with size, I can get out, I got range, so I can get in 10,000 shares, something, get 50 cents, that's 5,000 bucks. You guys see me trade every single day. You know, when I get in and I can get in and out with size, that's when I'm happy, because that's where the big money's made, and that gives me a nice cushion for the rest of the day. You know, I'm up like a nice 5,000 bucks from the morning. The rest of the day, I could probably, you know, pad the wallet nicely and take some trades, not knowing that I am, you know, comfortably in the green. Helps my mindset. Sets off the rest of the day on a really nice positive note. Less likelihood of manipulation. Because of the high volume, algos are less likely to try to manipulate the open. Because why? They got to front more capital to manipulate a higher organic volume stock. Right? Those bid props are less likely to be impactful if there's a lot of organic volume. You got to bid prop the stock a lot more with a bigger bid prop if you want to bid prop the stock. You got to put a bigger wall if you want to pin the stock down if there's a lot higher volume. So they got to front more money to manipulate the stock. And most times they're not going to do that. It's too risky for them. It has happened, but usually in a more of a fake volume situation. But when there's high volume, less likely to be manipulation, because just by virtue of the fact that it's just more risky for them to have to front the money to prop the stock or keep it down or whatever. Things get sketchier as the day goes on. Don't put yourself in a position to get trapped, guys. Don't FOMO. Don't gamble. Wait for the setup to come to you. We talked about the setups. Go ahead and watch this webinar again and review this after it's done. Watch it as many times as you need. Look at the examples. Find your own examples. And see if you guys can understand when is the higher percentage trade available to us and when is it still a 50-50 gamble. Lower volume. Again, going back to the higher volume being the less likelihood of manipulation. Lower volume allows for manipulation and the manipulative tactics of the algos to be much more effective. Lower volume means that they could bid prop with less capital. They could use less money to prop the stock. Right? They could use less money to keep the stock down for whatever reason. So understand that low volume is ripe for manipulation, and you got to account for that. You must downsize. You must wait for the A+ setups. Or how about walking away? That's an option too. You don't like the afternoon. You don't like the choppy action. You don't like the 50-50 coin flip stuff. You don't want to gamble. Hey, walking away, closing the platform, that's an option too. So understand that the best opportunities are in the morning. The afternoon could get kind of nutty. Can you still trade the afternoon? Absolutely. Again, I trade the afternoons. But it's up, I really pick my spots. And I size down substantially. So I'm only looking to make a couple extra bucks here and there. I'm not looking for a home run in the afternoon, guys. That's the key. So if you don't downsize, what's going to happen? You're going to get stuck with slippage. You get an ELTK kind of situation, you're in 20,000 shares, well, get ready to break out that piggy bank because you're going to have to fund a new account. You don't wait for A+ setups, what's going to happen to you? You're going to get chopped up. Chopping up is honestly a blessing in that situation. If you're going to get chopped up, that's better than getting an ELTK, you know, infinite dump squeeze from hell kind of scenario, right? But in any case, you got to wait for A+ setups. If not, get ready to deal with the potential headaches. Pop out that Tylenol, guys, that aspirin, because if you want to stick around in the afternoon and break all the rules, you're going to be popping a lot of pills. A lot of pills. And I want to see anyone doing that. So, alright, guys, so this is the last slide. Got a little nice South Park reference here. Hopefully you guys enjoy that. Kind of funny. Cadrius Blind saying, you shorted CTRV and warned everyone to avoid that long at the top. I was hoping that at the end of this you could retouch why you were so confident. So CTRV, let's talk about that real quick. So CTRV, the reason why I thought this was a short was because a couple of reasons. Stock was overextended pre-market. And here's the high of day. The volume drop off. And I traded this at the open. The liquidity was fake. Because I was trying to fill 5,000 shares for this washout long and I filled like 1,300. So I knew there was a problem there liquidity-wise at the open. Right out of the gate. So I knew that was a problem. And then once I saw the volume drop off, that told me for sure that there was fake liquidity. So once I saw the fake liquidity, I kind of figured, okay, what do they want to do? They're kind of consolidating here for a couple candles. Okay? So if you have consolidation here at the lows with these wicks, I'm thinking maybe they're probably going to trap, they're trying to trap shorts. So they ripped the stock. Lo and behold, they did trap the shorts there. I wanted to see if it would cleanly break this high of day. It didn't. It ended up wicking back. Low volume on the green candles here. That told me that they wanted to sell into this push. And that's exactly what it did, and the stock eventually dumped. So that was my idea on CTRV. Wasn't size big or anything. Obviously, it could have kept going. But the analysis told me, based off the fake volume, the little fake breakdown here, the little last-ditch squeeze, the fake high of day break, low volume on the green candle, that told me that they were going to slam it back down. So that's the logic behind that. Alright, so Axotone. For a trader that is not consistent yet, made a couple $1,000 in mid-sized account, would you advise him to withdraw his profits considering he's had huge losses before? But now he's making his way out of those losses. Asking for a friend. Just kidding for me. No shame here, man. No shame here, man. If I want to go through how much money I've lost on the way here, including profits, man, it's probably like millions. So no shame there. I would advise you to stick to small size until you're ready. So yes, I would advise you to wire out your profits. Again, disclaimer, I gotta say it, I'm not a financial advisor, yada 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 yada, don't sue me. But look, you should trade small and make sure you're consistent and keep your account small so that way you don't have the temptation to you know, trade with more size than you should. So wire out your profits. Yes, I absolutely agree. So, I mean, I'm trading with a $30,000 account myself, guys. Because I was trading with a $50,000 account and I started doing that OTLK bullshit. I was like, you know what? Forget it. $30,000 account for me. And last week I made $21,000 off of that $30,000 account. So, I mean, in the end, it still worked out, right? So, there's a big misconception that you need to have like a large account to make a lot of money. That's not true, and I proved it there last week. $21,000 off of a $30,000 account, guys. And again, not to just brag, but just to make a point that you don't need to keep all that money in your account to make a lot of money. So, Axel, Tony, answer your question, man. Just wire out your account, man. You don't need to keep it all in there. You're just going to risk doing something stupid with it. You know, either you keep your account in your bank account or, you know, the market makers will take it from you. especially if you know that you've had a tendency to lose in the past. No reason to do that. And again, guys, this is summer. Mind you, this is summer. Summer action gets sketchy. That's why I want to do this webinar, to really highlight all the points, the shenanigans, because it's a lot more prevalent in the summer. So I really wanted to talk about it while we're still in June, so that way, you know, you guys don't get stuck doing something stupid in July, August, and the rest of June, of course. So I really wanted to, you know, do this webinar today, so that way you guys get to review this information, absorb the knowledge, and don't get stuck in something stupid. Don't oversize. Nothing wrong with wiring out money in your account, playing small size, protecting yourself from something stupid, guys. Alright, so any final questions here before we wrap things up? Yellow lines are just support and resistances. They're just price levels. Yeah, I draw them manually. You can go to the MadazMoney video section, and you can see that there's a video on technical analysis where I draw them. Let's see if I can find that. Gadger's Blend asking, was wondering if you'd make a small video on your approach to trading taxes. I know, boring subject, necessary subject, or press or reference. I could refer you. I'm not in a position to really talk about that for a lot of reasons. Obviously, because I'm not a CPA, legal reasons, and it's the whole trading taxes is just different for everyone. It's very confusing. There's no way for me to cover all the bases. It's impossible. For some people, having an entity like an LLC makes sense. For some people, staying as a sole prop makes sense. It's just so confusing. I mean, I'm just being real there. So I would refer you to a CPA, but I probably wouldn't talk about it myself. Any other questions, guys? Charles Dress saying very helpful. Madaz Trilogy was great. Hopefully the next Madaz Trilogy will be better than the Star Wars second trilogy. I want to try not to let you guys down. Don't get me started on the third trilogy in Star Wars, man. Seriously. Darth Vader and Luke Skywalker are iconic characters, but I mean, I don't even remember the names of the characters from the episodes 7, 8, and 9. That's how bad it is. Yes, the next webinars will probably be level 2. So we'll plan that eventually. We'll talk about level 2. I know that's the good stuff, and you guys have been waiting for that for a while. So the next webinars will be on level 2. Axotone, when making profits very early and easy, do not get married to those green figures. Is it hard to trade? Isn't it hard to trade after being green? No, not necessarily, man. You gotta be objective. If there's opportunities, you gotta take them. If there's opportunity in the market, you gotta take advantage of them. In my opinion, whether or not you're up, down, or whatever, if your mindset is not there, then you can't trade. But that's your problem. That's not the market's problem. Obviously, if your mind's not in the right place, you should not be trading. But if there's opportunities and your mindset's not there to trade them, that's your problem. But I'm always there. If there's an opportunity, I'm going to be there. Green, red, whatever. So that's a philosophy I've always adhered by. Like some people are like, oh, I'm up $1,000. I hit my daily goal. I'm done. Right? I don't believe in that. I just trade. If there's a trade, I'm going to trade it. Whether I'm up 1,000, down 1,000, up 10,000, down 10,000. If there's a trade, I'm taking it. All right, guys. So gonna wrap things up here. Thanks a lot to all you guys here that showed up on Sunday. You guys are awesome. Tomorrow, of course, back to the daily grind, guys. Monday. Hopefully we get some good action. Last week's action was pretty good. Get more of that and none of that May stuff. Hope you guys have a wonderful rest of the day. And this webinar, of course, is recorded and will be posted on the private video section on the MadazMoney.com website. It will be probably processed in the next hour or so. I don't know how long it takes for YouTube to do it. It's out of my hands, but last time they were able to do it pretty quickly. So maybe in the next half an hour or so, you guys can rewatch the recording. Yeah, man, stay tuned for the next webinar, man. You never know what's going to happen. So thanks a lot, guys. Checking out. See you guys later.